Hello and welcome to this video. Today I'm going to be doing a stock analysis on the trade desk. Now if you like this video, please don't forget to leave a like and subscribe. And of course remember, this isn't financial advice, this is purely for entertainment and educational purposes. Now, the trade desk, what does the trade desk do? Well, they're an ad company and they make cloud-based advertisement as well as channels. So it's quite interesting. Now, let us take a look at the graph. As you can see, recently back we tipped off at about this December at around 140. And as you can see, it was quite a stiff road downwards, and this was because even though here, as you can see, they boosted earnings, it was under the estimated from the analysts. So that's why it had this huge drop back in February. As you can see, it dropped almost 50% for the day, and it then continued all the way down, all down to 40 bucks, 45 bucks at some point, as you can see here. Now, currently we are trading a bit upwards as well. As you can see, we do have this golden cross right here, so the upwards trajectory is currently there, which is quite nice, of course. Now, if we take a look at the stock in the longer period of time, as you can see, it is not the most quiet stock. As you can see, it is up and down quite a lot. As you see some periods here where it's down and up with a lot in very few time. As you can see here, in October of 23, we're up in 86. Then in November of 23, we're down in 61, and then in February of 24, we're up in 94. So as you can see, it is quite interesting. So it is quite a volatile stock. So if you don't have the stomach for volatile stocks, then this probably isn't the one for you. Now, if we take a look at the RSI currently, as you can see, we are currently in the overbought territory of the RSI. As you can see, that's above 70. So currently, buying right now is probably not the wisest choice, as we might see a bit of a correction downwards. If you don't know what the RSI is, that is your relative strength index, and if something is above 70, that is the overbought. If it's below 70 and above 50, it's in the upper channel here, which means it's trading upwards. Is it below 50 and above 30? It's in the lower channel and it's trading downwards. As you can see right here, the RSI is below 50 and it's trading downwards. And then as you can see right here in the RSI, where it's bottoming out below 30, it's oversold. Now, even though it's very oversold here, as you can see, then continued to drop. So maybe this great earnings call, it shows, hey, we actually made quite nice money, and the RSI might just be showing a fake overbought at the moment. We will only see that once if the price grows. So of course, now we are, however, lying on quite a nice spot. As you can see, probably see we are on a current support level with some earlier peaks or dips, as you can see here. So we are currently on a support line, which of course is great. If we had been trading down here, there would have been quite a, well, not quite a while, not quite enough room, but as you can see, we wouldn't be quite on a support level, but we are currently right on par with support lines, so that probably means that there is a chance there's quite a lot of algorithmic trading going on currently. Now, as you can see here, it's quite a large company at $38 billion. Now, they don't pay out any dividends, and they really never have, but however, they are having a very nice annual revenue and income. As you can see, it is just increasing, and increasing. And ads online and any place else is of course just going to increase over the future. So the trade desk is a quite interesting company just currently and also for the future, as advertisements just is going crazy at the moment. I also made a video on a similar competitor, AppLovin, and you can check that out on my channel as well. As you can see, annually it is quite great at the moment. So chances are it's just going to increase even more. Now for the performance, let's take a look at the stock. As you can see, let's just go back to Max in 2016. It either has huge dips, as you can see down here, in minus 22, minus 50, or 25, minus 3%, or it has insane gains. So it is quite a volatile stock, and currently it is actually looking quite cheap compared to earlier. It at least was down here, and given the fact it was trading all the way up down here and it fell due to a bad earnings, well, that's of course a bit unlucky. Well, it is also trading at quite a high PE. It has a PE currently of 93. So of course that is also why the higher PE a company has, the more it needs to surprise to even do great. So as you can see here, some years, as you can see, we have 3 years over 100%, 3 years in a row actually, goddamn. So if you bought in late 2017 or even early 2017, it would have been a crazy rise for you. So of course, some years it booms, some years it busts. As you can see for the year, however, we are being a bit of correction. As you can see, we were down almost 60% at some point of the year. So we have almost half our total loss at some point. So it is interesting at the moment, also given we are trading upwards. But as you can see, it is just a huge jump for the day, which might just, let's just wait and see how it may be trading downwards again, but let's hope that it trades more upwards or sideways. Now the technicals on this for the day is a SPY, it's probably no surprise, and for the month it is a neutral. And that's because, as you can see, even though it did fall down, it did make it was a slow descent, and it did make some support levels down here, bottoming out. You can see it was trading a bit upwards, trading all the way back from 45 bucks all the way up to about 57 before it really jumped back here up to 70. So that is why it's a buy for the day and a neutral for the month. But it's currently looking great. As I said, as you also have a golden cross right here, which of course is an upward signal when the 50-day moving average moves above the 200-day moving average, showing that the short-term momentum is greater than the long-term momentum. Now, the analyst rating on this, we have quite a lot. We have 43 analysts on it, with 29 strong buy, 3 buy, 9 hold, and 2 strong sell. And they are all over the place. As you can see, the strong sells, they are down here at 39 bucks, which is almost half where we are currently. And then the max is 135, which is insane. That is 73% left from where we currently are. I think that is quite too maybe optimistic. I think about 89, 92 is around where I would put it, so a bit above the current price target. But low to mid 90s is actually my best guess. Now, I do like the stock for long term, also just given the fact that how often it trades in huge ups and downs. So I have quite a high risk tolerance for my stocks. So very interesting stock at the moment. And you can also see down here in the estimated earnings that it's just continuing. So it is a great stock at the moment, at least just the business case for the ads and just all over the earnings and just how cheap it is at the moment. Now I have to say I don't own any of the stock. Now if you'd like me to make another video on any other companies, please leave them in the comment sections below. Thanks for watching.